Hi, welcome. I'm Jessie Walters from Charles Rutenberg. Today I'm here with Dave Ramsey, the real Dave Ramsey.
The real Dave Ramsey.
Yeah, and he's from Eland Mortgage, and we're talking just about how everything's going with the economy, with the mortgage rates, with the lending, and so I'm seeing it starting to slow now. Are you starting to see it slow too?
It has really slowed up. The phone calls are a lot fewer than they were 6 months ago.
Yeah, and so I don't know if it's because of the so we had COVID, and then when we had COVID, the actual everyone was trapped in their houses, right? So it was like, they were motivated to go buy new houses because they found out that it's not so much fun being trapped at whatever their house was. They needed bigger offices because they were stuck at home. They needed better views because they couldn't see. And now I feel like they didn't go on vacation. So now everybody in the world, I feel like, is on vacation. I mean, are you calling people? They're not calling you back? Or?
Oh, I get a lot of calls or a lot of inquiries, and then trying to follow up, they're just not available.
Yeah. So I've seen a lot of swimming pools go in too. Like a lot of people are like trying to make their house is like the oasis, and stuff. So, so the mortgage rates, everybody, if I was a psychic, I could tell everybody, but they're like, what do you think they're going to be by the end of the year? So not, what do you think that like the actual mortgage rates are going to be by the end of the year? Like, what's your?
I think for the qualified borrowers, I still think they're going to be around 6. I think your average borrower is going to be pushing 7. I do see them creeping up a little bit, but I don't see them running away. I don't see them getting up. But we lived for so long with rates in the 3s, let's say.
Yeah.
But I still, I've been doing this quite a while. I still remember writing good quality borrowers at 8 and 9%.
Yeah.
And then
we're still spoiled, but we don't remember.
Yeah. Well, but then after 2001, after 9/11, really, when rates dropped from that 7, 8, 9 level down to 6, everybody was so relieved.
Yeah.
And then it went down to 3. Now we're at 6. Truthfully, 6 is still a fair rate.
Yeah,
it really is.
It really is. Yeah.
I mean, I remember the first home that I ever bought. And I felt very fortunate. I was in my late 20s. I felt very fortunate just to buy a home, but my FHA rate was 13.
Oh, wow.
Yeah.
So when it was down to hardly anything, I was like, well, it's free money, and everybody kept saying, like, why are you saying that? You're still having to pay. And I'm like, 3%, 3%. It's free money.
Yeah. And right now, in the 5s and the 6s, that's still a very fair mortgage lending rate.
Yeah, true.
It's just that people, especially the younger generation, that have gotten, spoiled to the 3s.
Yeah. Well, it's like the interest rates for the cars too. I had a friend say, oh my gosh, I have to buy now for my car because the interest rates are going through the roof. And I said, well, what'd you pay? 4%. I'm like, it makes you sound old if you're like, I remember when it used to be 10% those cars,
Yeah.
But like they had 0% financing a couple of years ago, but now all those people that bought with the 0% and 3% cars, the cars are all old now, and they're like, we need new ones. Give us the 6%, 8%, But if you remember, right after the crash, those at the highest part of the crash, I know you remember this, but investors would pay whatever to get that money to flip that house. They didn't care if it was 18%, 20%,
Because they were looking at the bigger thing.
Yeah, they were looking at the profit. Picture. Yeah, they're like, well, it's going to cost me this for 3 months, and then
and then if I come across now somebody that's really complaining about that 6% interest, even with that 6% interest, it is cheaper than renting.
Yeah, true.
And the potential for the home value to appreciate, in which case you're going to make money, because you're going to pay a mortgage, whether it's your mortgage
or someone else's
or somebody else's mortgage.
Exactly. Yeah, and the typical, before all this increase and all that stuff, the typical like money in the bank, so I think of it like, okay, a CD was 1 or 2%. Your house. The gain was average 4%, and in Florida, some places were 6. Back when it was normal. And then like I had one sell, and she made in 9 months $100,000. So I mean that's like that of course she had bought it at a lower price, and then the houses around her
went up.
went up and up and up. But I mean, that doesn't happen for everybody, but 4% is still better than actually putting your money in the bank and the interest rates for CDs and stuff like that.
That's correct, too.
Yeah.
Yeah.
Yeah, so I was looking at, tell me what you think about this. So, everybody flips houses and then they put the money, they put the money back into houses, flips houses. Well, now you can barely find any houses to flip. So they're talking about like, okay, the stock market. So the stock market last year, and just like the houses last year, made all this interest and all this stuff. So, so if you find a flipper this year, obviously there's still the, lack of inventory. And so I always try to compare them again to the CDs, but the CDs are starting to creep up a little teeny bit.
CDs are getting a little bit better.
Yeah.
The bonds are another option, but
Yeah.
All the people that made money in the stock market, well, everybody with their 401ks, you're seeing them start to slide down. Mine are.
Yeah.
My investments have lost.
I know self-employed is like, what's a 401k? I know, me too. Well, so I figure, well, either A, you start flipping here or buy the stock market here, because now the stock market is one of the lowest parts. So if you're going to invest now, not a bad idea.
In the market.
Yeah, if you do invest in the market, it is really low and stuff. Not that I don't want to sell you guys houses. It's just that, I do notice,
Yeah.
And those I-bonds, the one I-bond that I think you can put up to, there was an I-bond that you can only put up to a certain amount in it per person per year. Do you see those? Those were, some of them paid, I want to say it was like 8%.
Did they? I didn't know
yeah,
they were
but
that high.
It was, you can do it tax-free up to, I think it's like, I want to say 7,000? I don't know. It's, you have to ask your accountants. I'm not an accountant or an investor or whatever, but it was so much per that you could, put in there and stuff. So I was like, that's interesting, because anyway, not to have to pay out when you're self-employed.
Right.
If you have a normal job, they just take it out for you,
They do, and you pay into it.
Yeah.
You got to be real disciplined if you're self-employed.
Yeah, I know. Don't go crazy. Don't go buying crazy cars and crazy,
Yeah.
Yeah, every once in a while I have to go like readjust, go back into, especially when it gets slow, because I think that was, I had this one day I walked into Publix, and I think I told you a story, but I was in the bakery, and one of my friends I saw, and I haven't seen you in so long. She's like, oh, guess what? I'm going to be a realtor. And I said, oh my gosh, that's awesome. And I was thinking there's like, when I started being a realtor, there was 220 in my office, and now there's like 2,300. So I was like, oh, great.
Right.
What's another one? But there's that many houses, so I wasn't thinking anything negative. Well, then out of nowhere, I hear this other lady say, oh my gosh, did you say you're a realtor? Did you say you're going to be a realtor? I'm going to be a realtor too. And I was like, great. So, but they call me for help and stuff like that. I don't mind, helping everybody out and stuff, as far as mentoring and everything. But I was just, everybody jumps on that bandwagon. They all want to be.
And they're going to be jumping off soon, the way this is going. But.
Yeah. So I got a call, and I was trying to think who it was. And if he's watching this, I got a call, and I literally was reading the text message, and I'm like, because I missed the call, and they text me, and I was like, who is this? Finally got my real estate license. Can you mentor me? And I was like, literally now I'll probably have more time to mentor you, but not the best time to start, right? Right when it's like, where everybody's like, is it going to crash? Is it going to level out? We don't know exactly what's going to happen, But yeah, he's on board and ready to, motivated. When you're in your 20s, you're like, and that I feel like that's like a missing, a lot of the 20-year-olds are trying to help the older people where they should, they should help people their age to try to find it, because people, they feel more comfortable with another 20-year-old so it's kind of like a, that little niche they could find,
Yeah.
So, I mean, I have some customers like I want to say in the last 4 months, one was, I think she's 19 or 20. And so I helped her down in, where was it? Inverness. I was down in Inverness at her granddad had left her a mobile home.
Okay.
And so I sold that, and I got referred to her, and she's like, I only trust you. And then I was like, oh, I have to drive an hour and 10 minutes. And I was kind of like, should I go? But I did. I went, and, she was very nice and stuff. And I'm like, no, don't spend this. I'm going to pay for school. And she was level-headed. She just knew what she was doing. She, I told her, because she said, I'm going to interview 3 people. Make sure you're the one for the job. She was very professional and everything. I was impressed. And then, so I was thinking about it, and I'm like, literally, that median, I think the median age group for purchase is 35, right?
Right.
So I think the biggest group of 35-year-olds is literally right now. So we have all these people coming in the influx into the market to buy new purchases, and you have all those motivated 20-year-olds. So there's like that young, where people are just starting out and they like to talk to people, in their age group or millennial,
Right.
But you guys got to work,
Well, they're expecting the easy avenue,
Yeah.
and it's not quite like that.
Yeah, like my nephew, I'm gonna have a mansion, I'm gonna have a beautiful wife, and we're gonna have a Lamborghini, and I'm like, well, that's awesome. How are we getting to that point?
How are we getting there?
Yeah, I'll sell you a house, no problem. But how are we getting? And so the one is going to be a rapper, and the other one's going to be a professional athlete.
Oh, really? A rapper?
Yeah, rapper.
Well,
yeah. So I'm like, just remember Aunt Jessie.
A lot of potential in rapping.
Yeah, and I'm like, and he does sound pretty good, but I'm like, I'm sure that everybody who is famous with, that got famous, people were like, ha, 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 you're not going to make it,
Right.
So you never know that 1%. But so I said, well, you got to have that job you do while you do your dream.
Mm-hmm.
Like, what's paying the bills? And they're
Your day job.
Yeah. What's your day job exactly? Yeah. Yeah. So we've had, so I've worked with Dave for years, and we've had quite a bit of funny stories and, some crazy people that we couldn't believe we actually closed the deals after.
We've had a few.
Yeah.
We've had a few.
Yeah. Where I'm just like, oh my gosh, you're never going to believe this. So, but I feel like we can make it happen if anybody can make it happen. You're good at getting them closed and doing the pre-interview too, which is important. So a lot of people will say, I'm going to go and get pre-qualified and this and that, but you kind of know that way to, how long
to counsel them, really, just kind of give them a foundation of what to do, what not to do.
Yeah.
And what not to do is really go frivolously shopping.
Yeah.
Which happens surprisingly more than you'd think.
Yeah.
People, aren't really.
Remember the Apple Watches? Remember when the whole family had? They're like, they're barely approved, and everybody got Apple Watches. Everybody. And I was like, and you're like, let me check, and then you're like, oh no, they just made it, but they had no idea, and we were like sweating it out for them. We were like ready to cry.
They financed thousands of dollars.
Yeah, with the Apple Watches, it was like they changed the whole debt ratio. We're about to close.
I've had that a few times.
Yeah.
I had one guy that went and rewarded himself with a motorcycle.
Oh, yeah, I remember that.
Before closing.
Yeah.
We made him.
Yeah.
But before we started working, I had a lady. We had her qualified almost to closing, and what a lot of people don't realize is that within 3 days of closing, they're going to pull a new credit report.
Right.
They're going to see what you've been doing.
Yeah.
And I had a lady that. This goes back almost 20 years ago, right when the flat screen TVs were coming out, and she financed a $15,000 flat screen.
Oh my gosh, it's like a used car.
Well, but the financing term for $15,000 was only like 4 years.
Right.
So
yeah.
Payment
like $700-800 a month.
It was actually higher than that. It was like $1,200 a month. She no longer qualified for the home. She had no idea.
Oh my gosh. And then did you return the TV and then correct?
She had to.
And then wait 30 days?
Yeah.
Oh my gosh, that's horrible.
Well, there's been a lot of things like that.
Yeah.
And people that spend their money in doing that, their common answer is, well, it's my money.
Yeah.
Yeah, but you want to borrow the bank's money.
Yeah. You have to prove to them you're a good risk.
Solid.
And everybody is a risk, but if you're a solid risk or a
the decisions you make come back.
Yeah. So do you remember the one we laughed about was the McDonald's one. It was like every day at McDonald's was like $150, or it was like $50, and then I think it was. So it kept changing their debt rate. You never think McDonald's could do that, but it did. Remember?
Oh, you're talking about when they were
every day.
They were swiping the debit card, but actually it wasn't just McDonald's. If you remember, they'd go to 7-Eleven in the morning.
Yeah, lottery. Yeah.
Buy a couple lottery tickets, a pack of cigarettes, coffee, and a Danish. And before they got to work, they started the day out with $18 to $25 debt.
Yeah.
And they couldn't understand why we were having trouble qualifying them, because their cash required to close, they kept spending it.
Yeah, and we had to ask
common sense.
We had to ask for money to help them close the deal. We had to get 6%, I think, or 3%.
You get up to, it was FHA, so
Yeah.
we could get 6%.
Yeah, so we
go
asked
back
for
to the
closing
sellers.
costs, and then, so they were, I mean, I know they were upset because they're like, the bank is like, the FBI, they're in my account watching me, and they want to know, and they wanted to know every day. It almost looked like a drug transaction. Every day was this money, cash going out for these lottery tickets, and every day when they would win, they'd put the cash back in, remember? Put the cash back in. And every day, so we're like, well, you're going to have to we have to write up an explanation of what you're doing. And they're like, why are they in my account? Why do they care so much? Well, because you're showing, like you said, this.
A weird transaction.
Yeah, every
history,
day.
in and out, in and out.
Except for the day off.
I had the same thing happen to a guy that was buying and selling stuff off of eBay.
Oh, okay.
And all these little regular
Makes
deposits.
sense,
Sometimes 2 and 3 deposits per day. 'Cause
Yeah.
he was doing so much trading.
Yeah.
But that non-payroll deposits a lot of times have
Yeah, you
to
have
be
to have,
explained.
explanation. Yeah, and I don't think people realize that they're going to pull your bank statements sometimes before. I had one, I got so the contract fell through for this house.
Mm-hmm.
And the reason that fell through was because he had lost his job, but he thought he could just skim through it. Now, I wasn't his realtor. I would have been like, what are you talking about? So he got to closing a couple days before closing, and he couldn't close because they did the job verification
Right.
through human resources or whatever.
To a
to
workplace.
Yeah, and it came back that he didn't have a job. So I saw back on market, and so you always, what happened? Did the home inspection not go well? Is there something wrong with the house? Oh no, everything's fine with the house. The buyer lost his job and decided not to tell anyone. Thought he could pull it over on the bank. So we scooped up a really good deal, which didn't really happen in the last year. We got a house that was appraised $20,000 more. They just, at that point, they just wanted to get rid of the house because now it turned into, a lot of people get motivated when they know that money's coming in. They get their eye on something, they're buying something ahead of time, they've already spent the money, you know what I mean? They're already motivated. So we got a real good deal on that. It made some happy customers. So they got a pool house and the whole thing. It was like, great. I was relieved, but I was like, how did he think that he would pull one over on the bank,
Well, just like when they pull a credit right before closing, they're going to call your employment.
Yeah.
Usually the day of closing to make sure you're still there. And I had a woman qualified, but she worked, she had her main job. Mm-hmm. She worked part-time at Home Depot.
Okay.
After we qualified her, we're in the middle of it, she decided to quit Home Depot.
Jeez. Oh, no. And then that was it.
She didn't tell anybody. And when they go and do the verification, she quit.
You're like, okay, you're going to have to wait till you get another job. Right?
Yeah.
Oh, gosh, change your whole debt ratio.
Well, actually, that one died because if you're qualifying with a second job, you have to be on that job 2 years.
Oh, right, exactly.
There can't be any job, any changes, any
that.
gaps. So
Yeah.
she was done. She never did buy. She lost it.
Oh, gosh, that's
Her husband was a little upset.
Yeah, everybody's a little upset.
Yeah.
All right, well, so you guys stay tuned. We're going to take a quick break. We'll be right back to give you more tips on what not to do to get a mortgage. Hi, welcome. I'm Jessie Walters with Charles Rutenberg. I'm here today with Dave Ramsey from Eland, and we're talking about mortgages and how the economy is going and what to do and what not to do for your future purchases. We were just talking about some funny stories and stuff, but we were also talking about, so, you know, when you're trying to get your mortgages approved and say you had a car repo or say you had some derogatory credit, what's your suggestions on that?
Well, and that's a lot more common than you think, so don't be ashamed of it, really, because, you know, things happen. But a lot of people think that if I pay off my bad debt, my credit score is going to go up, and that's not true. It'll keep it from going down, but the key to improving your credit score is to have good, positive credit. Usually you have to open up new credit. Usually that takes opening up a secured credit card, which is you put up X amount of dollars, $200, $300, $400, $500. You have to leave it there. You get a charge account with that limit, you use it.
Draw off your own money then?
Yeah, but you're going to get a bill. You can't pay that bill with the money in reserve.
Oh, got you.
That's just to secure the credit line.
Oh, okay, gotcha.
So you're going to get a bill, you need to pay it down. And then once you get that new credit, the worst thing you can do is charge over half of it and let that roll to the next month.
Yeah, you got to pay it monthly. Pay it off, pay it?
Pay it down close to off if possible, but don't
let it roll.
Don't max it out and then just make the minimum payment, because you're not going to help yourself then.
Yeah, and you're never going to pay it off then ever.
Well, but you see,
300 you might, but 3,000 you won't.
Well, they're not going to give you that. But really, it's kind of, you're rebuilding, so it's a testing ground of how responsible are you going to be now.
Yeah.
So while you're doing that, then you can look at some of the old past derogatories. If it's a medical, I'm going to tell you now, don't touch it. If you come up with payment terms or even pay off a medical collection, it sounds like you're doing the right thing, but that's a classification of a derogatory or a negative. When you pay it off or pay it down, you've reopened the negative. So you're going to find, even though you did the right thing, you made a payment or you paid it off.
Morally, you did the right thing, but
your credit scores initially are going to go down.
Yeah.
The dust will end up settling and your credit scores will rebound, but that's going to take a few months.
Okay. So if you want to do something immediately, if you're talking, okay, next year I'm going to buy a house, you can do something like that.
Or even in 6 months a lot of times.
Yeah, okay.
Okay, or I say 6, it's really 7 months.
What about, so I see, I see a lot of, and you do too, because you tell me, I had a cell phone bill and I switched carriers and I don't really owe them that $1,800. It's always like $1,800. I don't know.
It's ridiculous.
Yeah.
How do you owe a cell phone bill of over $1,000?
Well, you know what? Because I have a friend and she will not take any advice from me. Not that I'm a financial advisor, but I'm like, she's like, well, I bought this phone and they told me, the salespeople told her this, this, and this. And she said, I just want to cancel it. But if I cancel it, they charge me for this phone that I got for free.
Right.
So I had to stay with this plan for 2 years, and I got a free phone. But because I canceled it, then they just charged the phone to her.
Yeah.
So now she owes like $1,800. So I was like, no, listen to me. And the difference was that the agent, I guess, had told her she was supposed to pay $30 a month, but she was paying $50 a month. But I'm like, you're going to ruin your whole credit, literally, for $20 a month, With that collection. Yeah, with 20 times 2 years, you know what I mean? Mm-hmm. So it's really, it's a shame that you got ripped off, but it's like $500. The $500 extra is going to cost you $1,800 on your, you know what I mean? Yeah. So I was trying to explain it to her, and she's like, nope, I'm doing it. So she did it. Oh, you were right. I'm like, I hate to be right like that, Yeah. But she's not buying a house anytime soon, so don't worry. She's like, I'm going to just wait. I'm like, yeah, now you have to wait, Yeah. But she disabled herself by doing that, though, and I tried to tell her, so if you have the $1,800 on there for that cell phone, what's the best thing to do to get rid of that? To pay it off?
There's really no trick to getting rid of it. It depends on how old it is. A lot of times.
So what if it was, what do they call it? Charged off?
If it's charged off, then you're better off just leaving it. Okay. Because being that it's charged off, it really can't fall into a situation where you have to pay it off. Mm-hmm. What will happen is you'll have to qualify for a 1% payment of the outstanding balance into what's called your DTI, debt to income ratio. So there'll be a minimal payment attributed to that outstanding balance.
Oh, so they'll just put it in your debt ratio, but they won't make you pay it?
They won't make you pay
Okay,
it
gotcha.
because it's charged off.
Oh, okay, gotcha.
If it's an open collection and it's over $2,000, and when I say $2,000, if you've got 3 collections and they're $700 each, that's $2,100. You're going to have to address those.
Yeah, so I've seen them at closing. They'll say, oh, you have to bring $2,100 to closing, and you got to pay off all this debt so that you can qualify.
Right.
Or we've had one where they had to bring like a truck payment, pay off your truck before you can afford, and they had gift from family members. That was a long time ago. It was like they had to pay off the balance of an auto loan.
And that may have been a good loan. They just needed to get rid of that payment to
for
qualify.
The debt ratio. Yeah.
Right.
Yeah. So I think it was. It just reminded me of, remember the one that we had where the truck was sold, and I won't mention names, so if you're watching this, my customers, I won't throw them under the bus, but they had like a Chevy. It was like a really old car, and they said they sold it for $15,000, and that's where they got the $15,000 deposit for the loan.
Right.
And then when the underwriters came back, they said the truck was worth like $3,500 max.
I remember that.
So we had to get pictures, and then they just Photoshop pictures from the internet. Remember? And so they sent them over, and I was like, oh no.
Yeah, I
remember that.
I do remember that, but no, the underwriter didn't quite buy that.
Yeah.
One.
I know.
No.
I was like, okay, pretend like this didn't happen. I didn't even know. And then I said, hey, I know you're that truck you guys sold.
It was a Yukon.
To her sister.
Yes.
Yeah. And so I was like, is that person related? And she's like, and then they kind of like half confessed, but didn't really confess. They're like, maybe, maybe not. And I'm like, don't tell me. I don't want to know,
Well, I remember that. That's been quite a few years. But actually how we got around that, we had to wait. We had to delay the closing for
30 more days, I think it was.
Over 30 days.
Yep.
Because the money that they had put in the account had to be seasoned.
Right. And so
after time, it had been seasoned in the account, so therefore we didn't have to show it as the sale of the vehicle.
Yeah, because we had to show where that money came from.
Yeah, you have to source any large non-payroll deposit.
Yeah.
What amounts to a large non-payroll deposit is 50% of your earnings. If you make $5,000 a month and you deposit $3,000, well, that's more than half.
Right.
You got to show where that money came
It's like
from.
a red flag. Yeah.
It is. Well, we have to live by these anti-money laundering oversights that the government put in place.
Right, and they put them in place because somebody messed it up for us,
Well, a lot of cash dealings.
Yeah.
So.
Yeah, if people weren't doing things to mess it up, there wouldn't be all these rules,
There's a lot of rules left over from that came about from the foreclosure craze.
2006, 7. Yeah, so now when we're talking about being charged off, so leave those on the credit scores. So
leave the charge off, leave the medicals, don't touch those.
Yeah, because I don't, even when, they have tenants going to rent a house out and stuff, I don't have, like with a tenant, if I see medical, I don't even pay attention to that. I look at like, if you didn't pay, obviously if you have evictions, does that come up?
That's a housing debt. That's a problem.
Oh, okay.
If you
had an eviction?
Yeah, if you got a collection, just a collection account from an apartment lease that you didn't fulfill, that's a housing debt, and that carries a lot of weight in getting you disqualified. The other thing people overlook is timeshare.
Oh, really? If you don't pay the timeshare?
Timeshare's a house. It's a housing debt.
True. Yeah, those timeshares, I know that, they lure you in. That's why I was like, there's beautiful people, and there's beautiful food, and there's beautiful places.
It's a vacation.
So, when we went there, I told my husband, I'm like, now there's going to be people luring you in, like they're going to put the most beautiful food in front of you, and they're going to take you, and they're going to tell you everything's crazy. And then I'm like, just say no matter what, even if you're like, this sounds like a good deal, because it's going to sound great. Because we had to go to one day, and then COVID came.
Yeah, right.
So it finally came down to, and he's like, well, what if it sounds, and I was like, you're not coming with me. I'm going to tell them all this. So I got in trouble at this one timeshare. I asked them if they were like a cult, and then I pretty much got kicked out. So that didn't go well for me, but I was like, because it was just like, because I was like, this reminds me of Scientology. That's what I said. Yeah, not that, I mean, if you guys are into that, that's your own choice, you know, but I did compare it to to Scientology because it was just so addictive. So I can see why people go to a timeshare.
Was it one of those
crazy.
where they gave you the 3 or 4 or 5 days free stay?
Yeah, that's why I had to go.
And then you had to go to the luncheon?
I didn't realize, well, we were leaving a hotel and they said, hey, you want to come back for $100 or $130 for 3 days? And I was like, yeah, sign me up. So we paid for it. And they're like, yeah, you're just going to have to go, you know, you'll have to go 1 day to this thing for 1 hour. And I was like, first I was like, what do I do with my kid for an hour? And then I was like, okay, we'll all go. Then I was like, okay, I'm just going to go because that's how it all started, you know. But I had gone to one prior in Spain. I had gone to this timeshare, and that's where they pretty much kicked me out because I was
Spain?
like, yeah. So they pick you up in a hotel. This is a great story. They pick you up in a taxi, and it says you have a golden ticket.
Yeah.
Or you've won this, and they go, oh, you won, let's take you there. And so we didn't really know at that point we were going to a Scientologist, or it was a Scientologist-like atmosphere.
Yeah.
We didn't know where we were going, and I would not suggest this to anyone, especially nowadays. Don't get into a taxi and do what I did. But anyway, I thought I really won something, and I guess all the tourists do it. So we jump in, and there's 4 of us. We get there, place is beautiful. Like I said, everybody's beautiful. The food is beautiful. The place is beautiful. And then they started their sales techniques, and I'm in sales. So then they got really mad at me because I was like, you know, pretty much not being sarcastic, but like it was so sales pitched heavy that I was just like, I'm not going to buy anything. You guys, I appreciate your time. Can you take us back to where we were? So then when I compared to Scientology, they did take us back to where we were. They wanted us and our crew to get away from all the other people that were like chomping at the bit. So that was my first experience. And then, but there are nice, you know, one of my friends has a timeshare. Her parents have a timeshare, and they enjoy it. They really like it. But I see a lot of them get bought out. You know, like there's a company that'll buy your timeshare out.
That'll buy your timeshare, and that's great if it works for you. But I've seen a lot of people that get lured in from that sales pitch, the whole atmosphere, and then truthfully, they really can't afford it.
Right. And they pay, so a friend of mine did it, and she has to pay extra to get like upgrades and the timeshare. So she's paying that monthly, you know, the monthly fee for the timeshare, and then she's paying, like I want to say she's paid in like 50 grand extra to get these upgrades for the timeshare to make sure she can go, you know, because they can only go different places, different times, but to open up different things. They have different, so it's never ending, you know, is what the one she's in. And we went there though, and it was Daytona Beach, and it was like a 4-bedroom condo right on the water, and it was nice and stuff. But I'm like, how much a night would this cost me? You know, $300 a night times the 3 nights we're here. You know what I mean? I'm at like $1,000. Timeshare just costs you 50 grand. You know what I mean? Extra. Right. You know what I mean? So just for the math for me doesn't add up.
No, not for me either. No.
So timeshares, if you don't pay it, you're going to be paying for it, right?
Yeah, that's going to eliminate you. If you default on your timeshare until you clean that up.
Yeah.
You're not buying another home.
Right, because it's just like a foreclosure.
Right. And when I mean clean it up, meaning. Because I just went through one in the last year.
No, you're like,
well, they had to basically renegotiate, bring it up to where the past amount is caught up, no outstanding balance. Plus, they had to make at least 6 payments.
Oh wow!
To get in line. So I worked with these customers for right about a year before they could buy. They did, but they had to work hard.
Yeah.
So people don't look at a timeshare as a legitimate housing debt, but it is.
Yeah, that's interesting. Yeah, because I always wondered on the, you know, people that are like, well, I got evicted, but, you know, I can explain the bank, you know what I mean?
Yeah, right.
Like, because they call on rentals and stuff, and I'm like, I'm sorry, you know, maybe a homeowner that individually is going to rent to you may take an exception, but every time that comment when they say, if I just had a chance, those are the ones, and it sounds horrible, but like I think I've said that myself. But if I just had a chance, and if you don't work for it and make that for yourself, and you're literally asking someone to give you this chance, they usually wreck the house and they do the same thing again. Yeah.
Yep.
So I want to say I've had probably 10 of them, and one has been, oh, I'm so glad you gave me a chance, turned out great. And then the rest of them, they have all moved out and wrecked the house. I did this, on here I did the, what tenants can do to your house. Because people are always like, oh, I want to rent a house out. That's a great opportunity. I'm like, well, they can also trash your house. So I did a whole bunch of, it was like 10 years worth of trashing. But it was just disgusting garbage, maggot pictures. I did that a couple of weeks ago. But so what about, so you got, if you break a lease, or the evictions, those are all going to show up. That's good to know.
They show up. A lot of people, well, not a lot, but some people make the mistake of they're in a lease and then they turn the lease over to somebody else.
Yeah.
And they think they're safe.
Right.
Well, that other person
doesn't pay the lease either.
Yeah, breaks the lease, moves out. Well, it comes back to you.
Right. Yeah, so that's like literally assuming a lease. There's no such thing unless you go through the paperwork with the actual landlord or apartments.
Yeah, and not many apartments are going to let you out of a lease.
Yeah, exactly. Yeah, and if you come in and say, well, they're going to assume it, then they've got to run all their credit, and they've got to be a viable person to assume it as well.
Yeah, quite often, usually the person that assumes it is usually a roommate left over.
Exactly.
But when people move, I mean, they're still on the hook.
Yeah. Yeah, because then that roommate is literally a squatter. You know what I mean? If they don't have a lease with the, they can, because they'll say, well, I was paying them rent. Like I've had that before where they're like, well, I'm the tenant. And I'm like, I don't know you. You know what I mean? Like I'm the agent who rented the house to so-and-so and they left. Yeah, and you're in the house. I had one and they said, well, we paid her. And then she left, and so we're staying here, and I was like, no, you guys are squatters, and that's not how it works. You have to go through a whole process again, and I'll work with people, but I don't work with people that are like, no, we paid her, and we're not paying you. I'm like, well, then that makes you, I forget the paperwork I used, but that was in Pasco County, and it was, what's it called? But anyway, it's paperwork for squatters, and during COVID, there was no evictions, but there were squatter evictions.
Really? Okay.
Yeah, I found that out. I got to do a court case where the judge said, please stand and raise your right hand. I'm on the phone. And I was like, so I did it. Of course you're going to do it. But I was like, thought that was the strangest thing. It's not a Zoom call. I'm literally on the phone. Like, I think I was wearing yeah. It's in the morning. I was wearing a nightgown. I'm standing up. My husband's looking at me like, what are you doing? I'm like, I'm doing the court case, But yeah, it was the strangest thing. And they got thrown out. But as soon as they knew there was a court case, they took off. So it was empty. But we had already gone that far to get them out, which they thought they had rights and stuff. But everybody hold tight. We're going to take a quick break. We're going to talk about mobile home financing and some new stuff that we were talking about.
Sure.
So we'll be back in just back. I'm Jessie Walters with Charles Rutenberg. I'm here with Dave Ramsey, the mortgage guy from eLoan, right? eLend. Sorry, I knew I was going to mess it up eventually. eLend, and we were talking about what eLend does because right now I have a unique situation with a mobile home. The mobile home was actually moved from one site, which it got repoed, went back to the dealer. Then put back on the piece of property, and when they move and get repoed, we haven't been able to find a lender, but you're saying that you might be able to do that?
Yes, Fannie Mae, Freddie Mac, FHA, they will not lend on relocated manufactured homes.
Right.
But there is a few channels that offer a loan. It's called a chattel loan, and it's basically just on a piece of, or on an item, not property. They're commonly called a home loan. Sometimes your construction companies will get chattel loans on their big equipment. But it's that type of loan, so therefore, yes, there are avenues if you've got a home that's been relocated.
Right.
The trade-off is your term, meaning how many years, is going to be a little shorter, usually on average about 20 years.
Okay.
And the interest rate's going to be a little bit higher. I would guess on average about 3 percentage points higher than the
Okay.
going rate. But it still opens the door for that
Yeah,
possibility.
because the one's 200 grand, so it's for and it's on acreage, so it's far less than the average median,
True, and
So-
that's one thing we're seeing a lot of interest in mobile homes, manufactured homes.
Right.
They are a little bit more affordable. Your younger generation that can't afford the average here in this area is 300,000 to 400,000, and you can get same size square footage for 200,000.
Right.
And quite possibly a little bit of property too.
Yeah.
The other option with that chattel loan is you can buy a home in a manufactured home rental park, and that's ideal for a lot of people coming down from up north, retired people, or people that just want to have a winter home down here.
Yeah, because I've seen those in the mobile home parks. Of course, as a licensed real estate agent, I don't sell them, but I've turned to people who only have they'll say, oh, I have 20,000. Those parks. Some of those park models are 20,000. They look livable.
Well, or they're 80,000, and that 20,000 that you've got will be the down payment.
Right.
If you can qualify for that chattel
You
loan.
live in the life, yeah, because some of those are nice,
Some of those are very nice. You've got
Yeah.
the community center. That's just one option. But mobile homes are becoming a much more attractive option because of the price. Plus, if you go into the modern ones now, I mean, they have drywall.
Yeah.
They meet a pretty stringent structure
Yeah.
code, as well as how it's built and how it's tied down. So they're
Yeah.
very secure.
That's good.
It's a good option.
Yeah, it's because right now the inventory is down still, even though.
Yeah.
What's funny is even though everybody's like, well, it's slower now and stuff like that. It is slower, but there still are a
few.
bunch of people who want that house, even though it's slower. And as far as there's not, so I would go, say 6 months ago, I would go to a house and there'd be like a line of people. There'd be cars everywhere.
Right.
So now you'll go out and you may not be interrupted by someone as you were every 15 minutes. There's a show. There's a show. Well, now, but they'll still have a couple offers in. They'll have like 2 or 3 offers in at a time instead of 10.
10.
Or, yeah.
Yeah.
So it depends on which county and stuff too.
Right.
So, and like I said, the back on the markets, those are where you can actually hit the lottery for your buyers, But the median, the mobile homes, I've seen them start, and I don't know, is there a year with these loans?
After June of 1976.
Well, that's good though.
So
Yeah.
that's not a problem.
Yeah.
And the reason there is that is because of the HUD plates. That's when they started identifying the homes. The manufacturing guidelines changed at that
Right.
time as well.
So are they going to still have, because I don't know if you remember that one, we had to have the straps and they checked the well water. Is it going to do all that same guidelines for that?
No,
Chat?
no, not on this chattel loan, but your standard manufactured home loan
Yeah.
does have to have what's called a foundation engineer's report.
Okay.
And that's really for your safety.
Yeah.
To make sure that it has the proper straps.
Right.
Now, the other thing a lot of people don't think of, and truthfully I never did until this one time, this report showed that because the home had been put on a slight incline from our heavy rains, it actually eroded the dirt and a couple of the pilings had moved.
Oh, wow.
So that
That's scary.
had to be put back.
So they're like, well, what's that mean? Well, have you guys ever watched Wizard of Oz? I'm just kidding. Where the house starts spinning around, so these straps keep you from. You're not like a kite. They're metal. I had to have a guy. The last one. I want to say the last one I sold a mobile home, they had to restrap it.
Yeah.
So I had to find the guy to restrap it for him.
Well, if it was built before 2000,
Yeah.
they had a separate set of codes.
Yeah.
And if you're getting a FHA loan,
Yeah.
that has to be brought up to the 2000 and plus standards.
Right.
So it's called a retrofit.
Right.
And that may have been what happened.
So you still have to have the 2 FHA,
The 2 HUD plates on each half.
Yeah, so people, when they put that, they're like, what is the FHA plate? So when you pull the mobile home in and it has 2 has this
Two
side,
halves.
this side, they put it together, there's 2 plates, which they usually cover up, right?
They usually get
cover 'em
covered
up?
up, knocked off, painted
Yeah.
over, and then we have to go through it's called
Search.
IBTS to have
Tallahassee, right?
to have the it's actually a service that does it.
Yeah.
To have it costs a few $100s to have the identification plates verified.
I had one that was such a nightmare. We had the straps, we had the plates, we couldn't find the well. We were out there digging like we were off some scary movie at like 8 o'clock at night with the digging to try to find where the actual well was.
The well
to locate
and
it.
the drain and the septic drain field.
Yeah,
See,
exactly.
they're not supposed to be so close.
Right. So, and it was like the year of it could have been where it was like almost sketchy as far as, I think it's 150 feet was the
Yeah, but
well, the septic, but
they'll
I don't
give
know.
that's for new builds.
Yeah.
They will give a variance on
older-
existing ones that
Yeah.
met the current guidelines at that time. They're not going to make them put in a new drain field
Yeah.
so far away.
Yeah, so we had everything on the one, and the husband was, he was like, well, I'm going to sell it, but he had all this stuff in there, and I think when they would get, I don't know, maybe if they got in arguments, he would go there, he had like his own little setup. The house wasn't lived in except for this one room, but it just showed great, and the buyers, they wanted to buy it, they just couldn't wait, and they met all the neighbors, and then it would turn into, we needed straps, and we needed the FHA, and then we needed the well, and then we needed the well tests, and then, yeah, and the water, all the water tests.
test.
Yeah. And I just had one with the water test. Because of COVID, they have a shortage on the chemicals for the water test, for the lead.
Oh,
So if you need any of those
Really?
future, yeah, my water test guy, so I put a rush on it. So it takes the lead test down from like less than a week instead of 3 weeks.
yeah, I was going to say two
Yeah.
on average two, but
Yeah.
sometimes depending on a backed up.
So I said, I'll pay for the rush. I'm not even going to have my customer pay for the rush, just to get it done. And it was for the buyers, because I had the seller, was Tina, her house she was selling.
Oh, yeah.
Yeah, so I was like, no, I got it, because, I had sold her the other house, so I was like, oh, no, I got it. I got it for the buyers, because their agent didn't know it was a thing or how to do it. So I was like, I'll just take care of it. I'll rush it. Da, da. And they never even got it done. They never, the lender that this buyer had kept saying, we need the water test, we need the water test. I'm like, water test is rushed, it's rushed, it's rushed. Water test now, they don't have the chemicals to check the lead. There's a delay, and they just closed it anyway. So even on the day, I expected the lender to go like, where's the water test?
and they overlooked it.
They overlooked it. And I was like, I'm afraid to call on it now, I'm like, should I call on it or not, And yeah, so and they knew that we knew that bacterial came back fine.
Right.
We knew, so that it was drinkable, what is it, portable or potable? Potable.
Yeah.
Yeah. So whatever, it was good.
Yeah.
Yeah, so we knew that was good, but the other stuff, yeah. So, but that mobile home, that was like the nightmare thing. But I think now if you're like expecting it, you know what to go through. You know what I mean? It takes that one time to really have them ask for everything that they could possibly ask for,
Right.
So you can just tell your buyers, okay, you might have to have straps, you might have to have the water test, you might have to have this, you might have to, these are things that could happen. Get ready. So we might have to have an extension, but most likely it'll be
Yeah.
smooth running,
Part of that depends on the loan program they're going with, but
Right.
also each lender can have their own what's called overlays, whereas this lender doesn't require the water test on a conventional, this lender may.
Right. Yeah, and
You
it
don't
was
know that.
FHA too.
FHA has
Yeah.
a whole set of circumstances they require. If you're out there, they're going to require the water test.
Mm-hmm.
They typically don't require a septic inspection.
Yeah, they didn't,
But
yeah.
all of them, conventional or your government loans, are going to require the foundation inspection.
Yeah, definitely. Yeah, and I found some good guys that will go right out fast with to put the straps in.
Mm-hmm.
But, like I think some of them you just assume that because it's newer, you're like, oh, it'll be fine. And then they get out there, like you said,
And there's been some erosion. The one thing about that, which can wreck a deal, is the inspection, which usually runs about $400. That's the buyer's responsibility.
Right.
But if a repair or upgrade needs to be done, that's the seller's, and not all sellers are going to agree to that.
Yeah, and all sellers are like, oh, sign me up for a couple $1,000 on
It's-
straps. Yeah.
On average, it's $3,000 now.
Yeah, I think when we did it, I want to say it was 2000. I don't know how, I think I talked them into getting paid at closing, you know?
That's a rarity, but it
Yeah.
can be done. But
Yeah.
yeah, the cost on average about $3,000. Maybe that was a smaller home, or they were just.
Yeah, it was smaller. It was in Hudson, off of US 19, and they went right out and everything. They were great. But
Yeah.
then you know, they were like, yeah, sure, we can go out. And I'm like, can I pay you at closing? And they were like, I said, I promise, you know, I'll pay you if it doesn't go through. And they were like, I think at that point they'd already scheduled it, so they kind of like gave the mercy on me, you know. My customer was like, I'm not evident, you know, absolutely not, absolutely not. Then he was like, okay, whatever, you know. Because the actual buyers, the buyers were, it was kind of like an odd thing, but they were sick. The one was sick, so he was trying to set up a house just in case anything happened to him.
Yeah.
So we were all in this rush to set up this, because the wife didn't have any income, but the husband did. So it was a
And he was
really
sick.
weird, yeah, it was a really sad, weird situation, because they told me he didn't have much time left. So we were like, I was like, every time I was like, is buyer okay? Okay, good. Buyer okay? You know? So it was like, I don't even know if they knew all the, everything we had gone through. We were literally, you know, underneath the mobile home and, you know, channeling through, trying to find the well hookups. And then, you know, it's crazy. At one point I thought that the well went to the other property, because you know how like back in the old days they would share
They would
the
share
same
a well.
Yeah. So do you see that at all?
Rarely. There
Yeah.
are some places that
Yeah.
do that, but not so much anymore.
So what about the dirt roads? Is that going to be a factor?
It is a factor.
Yeah.
Your appraisal is going to note whether the road is privately or publicly maintained. If it's publicly maintained, then you're fine, because therefore your county goes out and grades it.
Right.
If it's privately maintained and you're getting an FHA loan, they're going to, I've had it. It sounds weird. That seller or the buyer and agent have to go out there and get all the neighbors leading
agreement
from that paved road to the point of the property, sign an agreement that states they will keep the road clear in case of a.
Do you remember Beverly, her house? I want to say, did she end up? I don't even know if she used a lender. Maybe, I don't know if but Beverly, she had the yard. I mean it went paved, then it went dirt, and it literally stopped like right in her front yard. It was like, are they gonna say we need it, or are they gonna say no? Because half of it literally just stopped halfway through the paved.
I think they only made her sign an agreement because it was only her address. It didn't go any further.
Yeah, because it was like the strangest thing. I remember that.
And truthfully, you know, what's the point of having
one person
or any of them sign it? How are you going to enforce this?
Yeah, you're like, you guys sign this. Get out there and get some shovels and fix that yard.
Or cut the trees down that fell on it, which they're going to do anyway. But what are you going to do with this?
Yeah, true. I know, it's funny. And you know, I see this year in the last probably 16 months, I've seen one FHA loan. I've only done one.
Well,
you've done a lot because of the mobile homes and stuff too.
Well, because of the mobile homes, but it's just a little bit easier to get into, a little higher debt-to-income ratio allowed, a little lower credit score. Obviously, the lower down payment, 3.5%.
Yeah.
So I'm still seeing them.
Are you seeing a lot of conventionals too?
A ton of conventionals.
Yeah.
People are coming down, especially because it's the fallout from COVID, let's say, although it's a good thing. Not that COVID is, but people that are relocating because they can work from home. They sold up north. They've got a lot more equity. They can come down here. They put a big down payment. They don't have enough to get cash. If they had, if there was a cash purchase, I wouldn't see them.
Right.
But obviously, they're still getting financing. But yeah, there's a lot of conventional buyers coming down from up north simply because their property appraised up there, and they're
like, I can get more for my money down in Florida
and work from home and feel like I'm on vacation.
Yeah, exactly. At least until the summer, until they're like, I can't go outside, it's too hot.
But I still see them. So.
Yeah. Well, so what was the other question I had for you? So on the conventional, are you seeing the 5% or the 20%? What's your
No, typically 10 to 20%.
Okay.
Yeah. Very few people, but very few people are in that 5% conventional. And all that means is they have a higher mortgage insurance percentage because you put less than 20% down.
Right.
You're required to have mortgage insurance. A lot of people I've had the reaction, oh, great, we get mortgage insurance. Well, what they're
Yeah.
thinking is that's if somebody passes, the mortgage is paid
Yeah.
off. No. Mortgage insurance,
For your lender, yeah.
it just protects the bank.
Yeah.
It is. If you can get to that 20% equity somehow,
Yeah, your payment's less.
well, and you don't have the mortgage insurance, because mortgage insurance is literally throwing money away down the toilet
Yeah,
because you get no benefit out of it.
right.
It's if you foreclose, it's an insurance policy that's going to pay the bank that first 20% of the debt that's owed.
Yeah, exactly. There's no sense in,
If you can avoid it.
if you can afford it, yeah.
If you can avoid it, yes.
avoid it and afford it,
Right.
right? Yeah.
And then,
And you can always, because I have some people that watch this too, and they used you for the mortgage, and now they're down to that point where they can stop them. And so you could literally either A, write a letter, or B,
usually,
refinance?
well, they can refinance sometimes if they want to take the cash out, or if the bank doesn't believe them. But most of the time, they can contact the customer service department, state, I've got enough equity. They're going to have to pay for an appraisal, but it's not a full-blown appraisal. Appraisals cost $600 now.
Yeah.
So usually it's $250 to $300 to get it verified that they have the equity to
Right.
get the mortgage insurance removed.
Right, that's good.
Yeah.
That's good to know, yeah, because a lot of, I think, because we've had so many deals, it's been years, so I want to say some of them are probably at the 20% now, you know?
Quite a few.
Yeah.
But a lot of them refinanced
Yeah,
when
true.
when the rates went way
Yeah,
down.
they're like, I got my boat, my RV, and all my stuff now.
Yeah.
Well, thanks for joining me today. If anybody needs any mortgage questions, lending, like you were saying, counseling, anything like that, contact Dave. I always say he's the real Dave Ramsey, so contact Dave. He'll give you great advice and set you up for a mortgage or a plan to get that house in the future. And thanks again for joining me today.
Thanks for having
you
me.
guys have a great day.